Good morning, traders. Welcome to this morning update on Wednesday, the 18th of May. I'm Tom Colley, and I'll be taking you through the markets this morning and the news. Just to point out, this was recorded about 4:30 this morning, so the slides are earlier than you would normally expect. The reason for this is we've got a boot camp this morning at 7 o'clock in London, so I've had to do this ahead of that. Let's start off with the news then. Yesterday we had news on the pound. The CPI coming in below forecast at 0.3% versus forecast of 0.5%. We had negative manufacturing figures in on the Canadian dollar. Then most interestingly, we had CPI and core CPI in from the States. The CPI figure came in at 0.4% actual against 0.3% forecast. That was the biggest increase in CPI month on month for over 18 months, and has been seen as being quite significant with a view to potential rate rises from the Fed going forward, on the back of some of the positive news we've been having recently from the States. We'll have a look at that in a little bit more detail in a moment. We also had some strongish numbers on the dairy price index from New Zealand, which came in at 2.6% increase against 1.4% decrease from the previous week. PPI out from New Zealand, big negative figure here, -1 against a forecast of plus 0.3. So mixed messages there on the Kiwi. We've got negative on the PPI, but positive on the dairy price index, which is so important to that economy, which is so dairy based. What have we got to look forward to this morning or through today? Average earnings from the UK and the claimant count. Crude oil inventories from the States. This will be one to watch for anybody interested in gold, CAD, etc. The figures came in quite substantially, on a quite substantial reduction over expectation on oil supplies being reduced in the States, which is potentially one of the reasons we've seen the latest bullish run on the price of oil as it heads back, or it's reached about $48 at the moment, but possibly heading back up to $50. Then tonight, a relatively big one, we've got the FOMC meeting minutes. When you're at 7 o'clock this evening, you want to be aware of this, where your stops are and what have you. I don't think anything is anticipated, but you just never know in these circumstances, so protect your capital on that basis. We also have, early hours of the morning, we have the Aussie employment change and unemployment rate. Okay, over to the markets. Shanghai Composite in China. We've seen a clearly bearish day after a gap down here, so we're still getting negative feedback on the equities from China. We were looking here at this level at 2,800, which we thought might be a level that we'd hold at, but we can see we've clearly got a close below that so far overnight. Over on the Nikkei, complete opposite, we've got a nice bullish bar here, up to the top of the range, this range here. Really, we've had, over the last week or 10 days, we've had really what is quite a bullish move here, although we are at the top here, be waiting to see what happens here, but we're still clearly within this triangle formation here, which we will expect to continue a little longer before breaking out to either the upside or the downside. Dollar index, very quiet day on the dollar again yesterday. Another doji, no action from that, but then overnight we've seen a bullish move here, which has been reflected certainly in one of the trades that we're currently in, which I'll speak to you about in a moment. The level of interest, the next level of interest is $95 at this level here. We'll be looking for a break above that to reinforce our bias on dollar strength. Potentially we'll see a pullback before a break above that, but we are aware of this level in relation to other markets we're trading at this moment in time that are reliant on dollar strength. Here we have the euro, and here's one of those markets that we are reliant on dollar strength for. We have an order in place at this level, which we were looking to have triggered by now. Price, because of that dollar strength overnight, price has fallen here. This level through here, which would have been our target for this trade, corresponds with that $95 level. So we'll now be looking for that to break, pull back, retest, to trade that to the short side. Once the dollar goes above that 95 level, we should get some more concerted dollar strength for a period, so a nice opportunity potentially there. Over on the Aussie, this is a trade we're actually in. We were somewhat spiked in overnight last night based on Aussie news, but overnight prices come down on the strength, or on the back of the dollar strength. It's hit our T1 target. Our stops now at break even at this level. We've got money off the table, and we're looking for our T2 target down at this level. So money taken, profits made, stops at break even. That will be one that we've no fear of holding through, and the FOMC minutes this evening. Another trade that we took yesterday, we have been in the S&P. We've been short through this leg here. We're also short through this leg here. We took profits on Friday when we saw price store at this really significant level yesterday. Sorry, on Friday. Yesterday, at this level here where price stood, price moved back up on Monday on a really strong move on the back of oil prices and Warren Buffett's investment in Apple. But yesterday we saw the complete reverse, a bearish move again. We looked at, we took an opportunity on the 1 hour chart, which is here, double top here, a break of the double top neckline through here, and price coming away down here. Our target was actually down at this level here, but before the close of the market last night, we took profits at around this level, so that was a nice little trade yesterday. We are very much waiting or looking still for this break below the 2040 level for a retest for a more significant move down. We have been looking at this head and shoulders formation. Is that still valid with what happened yesterday? Technically, yes. But I think you now have to look at it simply as a break and retest down to the next level, which the next significant level is at around 2000 or thereabouts. Okay guys, that's it for today. Short and sweet. It's very early this morning. This is the Phoenix Pure Analysis system that we've been looking at. You'll hopefully like the clean charts. Are totally based on price action and horizontal levels, no lagging indicators. We use a fundamental bias. We've also got our commitment of traders analysis, and we're trading predominantly with 40 pip stop losses on FX majors. If you're interested in improving your results, visit our website www.phoenixblue.co.uk or simply email us at info@phoenixblue.co.uk. Okay, that's it for today. Thank you for listening, and we'll look forward to speaking to you again in the morning. Take care.